Welcome to the weekly market update. I'd like to start the session by giving you some information about me. My name is Ehab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Let's start the session. Here are the events that we will be looking at this week. Wednesday, 9th of December at 8 p.m. London time. New Zealand interest rate. Thursday at 12:30 a.m. Australian employment change. 12 p.m. UK Bank of England interest rate. Friday 11 at 1:30 p.m. US core retail sales. Not busy week like last week. And the market news, Euro surged sharply last week as the scale of ECB's additional easing announced was seen as a disappointment by the markets. Strength of the common currency was only overwhelmed by the Swiss franc, as the underwhelming ECB announced would likely put less pressure for actions by the SNB to counter. The non-farm payroll report from US was solid, and comments from Federal Chair Janet Yellen also affirmed a rate hike later in December. But the dollar still ended the week generally lower as the second weakest major currency next to the Japanese yen. It's understandable that dollar was overpowered by euro. However, the dollar weakness against commodity currencies as well as gold is worth a mention. Commodity currencies like Australian dollar, New Zealand dollar, and Canadian dollar. Volatility would likely stay high on thin trading ahead, and the US dollar could stay under some pressure in near term, in spite of all the signs of rate hike by the Federal. To recap some of the major events last week, US non-farm payroll report showed 211,000 growth in jobs in November, above expectation of around 200,000 or little bit less than 200,000. Prior month's figure was also revised up from 270,000 to 298,000, the revision. Unemployment rate was unchanged at 5%. ISM manufacturing index dropped to 48.6 in November versus expectation of 50.5. That's the first contraction reading since the end of 2012. The reading of ISM manufacturing index at 48.6 and was the lowest level since June 2009. And it could be one of the major reasons for the lack of post non-farm payroll strength in dollar. Also, ISM non-manufacturing companies also dropped sharply to 55.9, missing expectation of 58.1. ECB at its December meeting announced to cut the deposit rate by minus 10 basic points to minus 0.3%, effective December 9th. At the press conference, President Mario Draghi announced extension of asset purchases by 6 months, suggesting purchases would continue until end of March 2017 or beyond if necessary. Regional and local government debt are now included as eligible assets for buying in the program. Yet the ECB maintained the pace for asset buying at 60 billion euro a month. Market was disappointed by the magnitude of the easing measures. Indeed, some had expected a strong deposit rate cut to minus 0.4% and acceleration of the pace of asset purchases from 60 billion euro a month. And we could see the reaction of the market last month for this disappointment with strong rise of the euro against other currencies. In Canada, Bank of Canada left the overnight rate target unchanged at 0.5% for a fifth consecutive meeting in December. The bank rate also stayed unchanged at 0.75% and the deposit rate at 0.25%. The tone delivered in the accompanying message was largely the same as October 1, so with some tweaks. Overall, the Bank of Canada remained dovish as it has been since the beginning of the year. We expect the central bank to keep its monetary stance unchanged for most of next year, especially if the price of the oil will not change around the range that run in it now. In Australia, RBA, as expected, left the cash rate unchanged at 2% in December. The accompanying statement contained few changes on the descriptions of the economic prospects and the monetary outlook. More notable change was seen in the housing market, with the central bank acknowledging moderating pace in the growth in homes prices in Melbourne and Sydney. On the monetary policy decision, the RBA noted again that believed that the prospects for an improvement in economic conditions had firmed a little over recent months, and that leaving the cash rate unchanged was appropriate. So that's why we don't expect the way change cash rate any soon. Now with the events that we should look at this week. We'll start with the New Zealand interest rate that will be released on December 9th at 8 p.m. London time. New Zealand interest rate decision is expected to cut rates by 25 basis points. Considering general pressure on commodities, RBNZ, the Reserve Bank of New Zealand, is likely to remain its easing basis well into year early 2016. How to trace this news? Current forecast from economists surveyed by Bloomberg agrees that Reserve Bank of New Zealand is likely to change the official rate at this meeting. However, in the event that Governor Wheeler surprises the market either by keep rates unchanged or cut by 0.5% more than expected, we should see an immediate strong volatility in the New Zealand dollar, which is a great opportunity to trade it. So we will make a rise option if the interest rate release at 2.25%, and they will make full options at 2.75%. And we don't need to wait for after news retracement. We just enter the market as soon as we can, and we place our option and make our trades. And usually, like this news of interest rate, usually it changes the direction of the market in recent term. So we can make the expiry for our option 2 or 3 days, or even to the end of the week. But if we don't get the deviation number is the number between the actual release and what's expected. So if we don't get the deviation number, if the actual release will be 2.5%, I expect the market to follow the pre-release market condition and sentiment and just follow the pre-news trend. At this moment, if you see the direction of the market is downwards, just make rise option after decent retracement in this condition. And if you see the market is moving up, just make rise option according to the pre-news trend. Australian employment change will be released on December 10 at 12:30 a.m. London time. Always be prepared before news release. Get next to your computer, like find the source for the news, and get ready about 5 or 10 minutes. So this news will be released on December 10 at 12:30 a.m. London time. The Australian employment change release will be a short-term market mover for the Australian dollar. However, considering recent drop in commodities and the fact that China is experiencing market turmoil, I would not hold on any long trades on the Australian dollar. So I don't recommend making rise options with long-term expiration, maximum 2 days, or some hours, or intraday, just intraday trading for the Australian dollar, because we don't expect what could happen in the oil market at any moment. Australian employment change, it's forecast at minus 10,000. Previously, it was in plus 58,000. How to trade this news? Our plan. The deviation that we are looking for is at least of 25,000. So we will look for deviation of 25,000. Deviation from the forecasted. So 25,000 in plus or in minus, it's our deviation number in this news release. Expect to see the effect of this news to last minimum 45 minutes to 2 hours. This is high impact news. Typical news effect should last under 2 hours. So our expiry will be 2 hours or less. One other important news to pay attention to is the unemployment rate, which is expected to rise to 6%. If we don't get a conflict with the employment change, then we will proceed with the trading plan. We will look to trade this news using after news retracement trading method. We will wait for the market to retrace and stay out of the market during the release time. At the release time, we will only watch the market, watch the actual release, and we will take decision, and we enter the market only after decent retracement, usually within 5 to 15 minutes after the news time. So if we get plus 15,000 of release, our bias will be to make rise option of the Australian dollar against other currencies. If we get minus 35,000 of release, our bias will be to make full option of the Australian dollar against stronger currencies. I recommend the dollar, the US dollar. So we will only enter after we see a decent retracement from the initial spike, and if we get the deviation number, that's 25,000. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, most probably downwards. So at this moment, if we don't get our deviation number, we will look at the trend before the news release, and we will enter the market according to this trend. We will make rise option if we have uptrend before the news release, and if we don't get our deviation number, or full option if we had low trend. And for sure, and we don't get our deviation number. The next news today is the UK Bank of England interest rate release on December 10th at 12 p.m. London time. Bank of England interest rate decision will set the pace of the pound until the end of 2015, with Bank of England still delaying the rate hike. Also, there is no real expectation for it. This release, along with vote counts, should provide enough hints for the market. How to trade this news? It's unlikely event that Bank of England will hike rate to 0.75%. We will make rise option of the pound immediately if this happens. And because of the level of the surprise, I think you will see a strong trend change of the pound in the next few weeks if we get 0.75% interest rate as this release. On the other hand, if we get a surprise increase to 400 billion or more in the what's called the APT or quantitative easing, I would send or this will send a bearish signal to the market, and we should make full option of the pound in the short term. So we will make rise option with long-term expiry if we get the actual release of the interest rate at 0.75%. And the full option if we get the APT figure at 400 billion. So if the quantitative easing will be at 400 billion, we will make full option, but it will be for short term intraday trade. However, further stimulus is likely to help the pound. Further stimulus by making this increase in quantitative easing. So if you missed the original fall entry, I would suggest to make rise option to the pound instead at the support level. First support level, we can see the market at this level. So we will make rise option at 0.75% rate, and we will make full option if we get 400 billion ATP quantitative easing. If we miss the full option, we will wait till the first support and we will make rise option for long term expiration. Like third scenario is if the Bank of England cuts rates to 0.25%, and if that's the case, it should be a full option on the pound. Last news for the next week is the US core retail sales that will be released on December 11 at 1:30 p.m. London time. US core retail sales is usually a good market mover, and with end of the year holidays that's coming up, we should see a strong figure in this release, US core retail sales. Remember, it's forecasted at 0.3%, previously it was 0.2%. How to trade this news? The plan to trade this release is straightforward. We are going to wait for 0.7% release or better to make rise option on the dollar, or minus 0.3% or worse to make full option on the dollar. If we get a in-between release, we will need to look at the pre-release market condition and sentiment in order to make a decision, or just to stay out of the market. So we'll make rise option at 0.7% and the full option at minus 0.3%. We will trade this news release using after news retracement method. We will pay attention to both headline and the core retail sales figures. It will be released at the same time, but our focus will be on the core figure, core retail sales. Remember, you can use the default pair of the dollar yen or euro dollar to trade this news. I want to remind you, if you missed the webinar or want to watch it again, you can watch it at binary.com YouTube channel. You can also find instant updates of the news at resources page at my website, ihabjubil.com. Go to my website, ihabjubil.com, and press the resource page, and you can find instant updates of the news. So then, I'd like to thank you for attending today's webinar. We will hold following webinar next Monday. Goodbye and see you next time.